Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Datavault AI.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our analysis. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get right into the analysis of Datavault AI, because for you, the investor, this name presents the ultimate high wire act.
A high wire act. How so?
Well, the core story is built on this monumental contradiction. You have these aggressive, even revolutionary future growth projections.
Okay.
And they're sitting directly opposite massive current financial losses. This isn't just a classic risk-reward setup. It's, an all-or-nothing bet on execution.
That contradiction is exactly why we're talking about it. When you look at the recent numbers, the bullish side,
Yeah,
it's really undeniable.
it is.
So let's start with the financial excitement. Datavault AI's third quarter 2025 revenue hit $2.9 million.
Which, on its own, is a 148% jump year over year.
Exactly. That kind of growth is rare, and it suggests they are, finally starting to commercialize their tech effectively.
That Q3 beat is the proof point the market was waiting for. And to put some context around it, the trailing 12-month revenue, the TTM, is currently sitting at around $6.17 million.
A micro-cap company, really.
Right. But it's management's forward guidance that's causing this tectonic shift in how investors see them.
And this is where the numbers stop being normal and start becoming aspirational, to say the least.
That's a good word for it.
Management raised their full year 2025 guidance to at least $30 million. But the real headline, the number everyone's whispering about, is for fiscal year 2026.
They are calling for a staggering $200 million in revenue.
$200 million.
That is a primary bullish catalyst. For you, the listener, you have to understand the sheer magnitude of that leap. They're projecting to go from just over $6 million in TTM revenue
to $200 million in less than 2 years.
Exactly. That kind of jump implies this exponential ramp-up in licensing deals, in technology adoption. It would completely re-rate the entire company.
Okay, but let's play devil's advocate for a moment. That $200 million figure is internal, and frankly, it sounds a little too good to be true.
It does.
So how do we square that vision with the very, very dark current financial reality? Because the present balance sheet is pretty ugly.
It is. This is why the risk is so high. I mean, to achieve that kind of growth, they have to invest aggressively, and that just burns cash.
How much are we talking?
Trailing 12-month losses are currently around negative $94.24 million.
Wow.
And if you look back at 2024, the losses were $67.73 million.
Yeah.
So their cash burn actually accelerated by 170% year over year.
So they are hemorrhaging cash. I mean, a skeptic would call that a spending spree, not an investment phase.
Of course.
If they're burning nearly $94 million to bring in just $6 million in revenue, how can any investor trust an internal projection that implies a 30-fold increase in sales?
And that is the right question to ask. The market, however, seems to be giving them the benefit of the doubt for now. It's viewing this as a necessary R&D and intellectual property protection cycle.
So the negative earnings per share, the negative 1.60 TTM, the market is just ignoring that.
It's discounting it because the accelerating revenue, especially that Q3 beat, suggests they're moving closer to monetization. If they hit even half of that spectacular guidance, the current stock price, sitting around 65 cents, it instantly looks massively undervalued.
And this is a big but.
It's a huge but. If they fail to execute on that $200 million vision, those 9-figure losses become an existential threat, and very, very quickly.
So if execution is the key, the next question has to be, what's the mechanism? How does a company with minimal sales suddenly unlock $200 million in revenue?
The answer has to lie in what they own. It's their intellectual property moat. This is not a service company. It is an IP-heavy play. Their competitive edge is structural. It's built around an expansive patent portfolio that creates really high switching costs for any competitors.
And we're talking about their WISA patents specifically, right?
Yes, they hold 63 of them, focused on high-fidelity wireless audio technology.
63 patents is a serious shield, and they're not just sitting on them either.
Not at all. The sources indicate they filed 9 new WISA patents in 2025 alone. It shows an active, aggressive strategy to expand that moat.
And it's not just audio, is it?
No, this proprietary tech goes far beyond that. They're focused on the convergence of AI, data, and finance, holding new patents specifically in blockchain content licensing and tokenization.
They have some interesting trademarks, too.
Right. Unique technologies like inaudible tones, which is a subtle acoustics technology for data transmission, and they've developed platforms like DVHolo, Event Citadel, and Datavault.
Can we just clarify tokenization for a second? For listeners who might not be tracking the blockchain space that closely, what is real-world asset, or RWA, tokenization?
Sure. RWA tokenization is simply taking a tangible or legally protected asset, in this case their IP licenses, and turning that future revenue stream into a fractional tradable digital security on a blockchain.
So it makes something illiquid, liquid.
Exactly. It transforms what was once a rigid private contract into a potentially liquid asset class.
Hmm.
It allows them to fund development or distribute rights in totally new ways.
And if they hit that $200 million projection.
Then those tokenized assets could become extremely valuable, justifying the whole focus.
That brings us back to the market validation of the IP. Is this technology just theoretical, or are big players actually using it?
Oh, it's very real. Their acoustics technology is already being used by major established OEMs. We're talking about blue-chip names like Klipsch and Bang & Olufsen. They're adopting the core wireless audio technology. That kind of adoption by high-end brands validates the quality and, the market relevance of those 63 WISA patents.
Crucially, they're not just hoping the patents do the work. They're signaling they are prepared to fight for them.
Precisely. The decision to hire Kasovitz LLP, which is a premier law firm known for aggressive IP litigation, that's a major strategic statement.
It's a warning shot.
It is. It signals a robust defensive strategy to the market. They're basically saying, we have this high switching cost technology and we will aggressively protect its exclusivity. That commitment to enforcement really underpins the potential revenue needed for that $200 million target.
Okay, now let's pivot and look at the recent market action, because the stock price, it's been a roller coaster.
Total roller coaster.
And that volatility is what's making it attractive to swing traders. We've seen these significant 20% pre-market surges, but then it pulls back just as fast.
And it's currently trading around that 65-cent mark, which is a deep pullback from its 52-week high.
The technical setup, though, it suggests this volatility is masking some underlying accumulation.
I agree. Despite the wild price swings, the price action is setting higher lows. That's a fundamental bullish signal, suggesting buyers are stepping in at progressively higher levels.
On top of that, technical indicators are showing the stock is highly oversold on the RSI, the Relative Strength Index.
For anyone unfamiliar, the RSI measures momentum. And being highly oversold means the price movement to the downside has been excessive, and it might be due for a reversal.
And when you combine that oversold RSI with those higher lows,
You potentially get what technicians call a hidden bullish divergence. This means momentum indicators aren't confirming the lower prices, which often signals that the stock is coiled for a significant, rapid upward move.
a classic spring effect. But does any of this technical analysis really matter when the fundamentals are so stretched? I mean, a 200% price target relies on management hitting a guidance number that seems almost impossible.
It matters because technicals reveal investor sentiment, and the volume confirms that interest. The stock recently registered elevated trading volume. It was the second highest market-wide on January 1, 2026.
Wow, what was the volume?
Over 220 million shares trading daily. There is strong retail interest here. On top of that, the 50-day and 200-day moving averages are lining for a potential golden cross.
And what does a golden cross signify for the average investor listening?
A golden cross happens when a short-term moving average, like the 50-day, crosses above a long-term one, like the 200-day. It's one of the most powerful long-term bullish signals in technical analysis.
Suggesting a new uptrend might be forming.
A sustained uptrend, yes. If that happens, it would lend strong credence to the whole technical argument.
Okay, so we have the massive revenue catalyst, the IP moat, and technicals suggesting a coiled spring. What are the specific hardwired events in the near term that could trigger the next big move?
January 2026 is absolutely critical. We have two major events happening within days of each other.
Oh.
First, you have CES 2026 running from January 6th through the 9th. That's the premier global stage for consumer electronics.
And what's Datavault AI's role there?
They'll be showcasing their core technologies, WISA, ADO, Verify U+, critical acoustics updates, visibility at CES, especially when demonstrating tech that's already in B&O and Klipsch products, can instantly raise their profile.
Attracting institutional attention.
That's the hope. Then, the second major date is tied more to speculative interest.
And what's that?
January 7, 2026 is the record date for their warrant structure and the Dream Bowl meme coin. These kinds of deadlines often create forced buying or speculative interest, offering immediate upside potential right into that date.
So a very catalyst-rich first week of January.
Extremely. Looking beyond that immediate swing trade, the broader analyst consensus is incredibly bullish.
What's the target?
The consensus target price is $3. From current levels, that's a potential upside of about 197%. The institutional view seems to be that the stock is just severely mispriced due to the risk factors.
And we absolutely have to talk about those risks, because if the upside is nearly 200%, the risks are just as pronounced.
They are.
And they're centered primarily on dilution and execution. The company currently has about 285 million shares outstanding.
And that existing share volume combined with outstanding warrants, some with an exercise price as high as $5, it creates this constant structural overhang on the price.
Meaning if the stock price goes up.
Warrant holders convert, flooding the market with new shares.
Yeah.
That potential dilution is what contributes to those sudden 20% dips. It's a huge headwind, but it's also why the stock is available below $1. The risk is priced in.
We also saw that big headline about insider sales. Silex, a former large owner, sold 20.7 million shares in December 2025. That has to raise some red flags.
On the surface, yes, that's alarming. However, the analysis shows the sale was explicitly for tax reasons. In the grand scheme of things, it's generally viewed as a non-alarmist event.
So not a sign of corporate distress.
Not seen that way, no.
Yeah.
The core risk remains the company's ability to actually hit that extraordinary $200 million projection.
So what's the final verdict for the investors sitting on the sidelines trying to figure this all out?
The final thesis is this. Datavault AI is a pure intellectual property play. It's benefiting from the sector rotation into AI and tech monetization. It's priced incredibly low, around 65 cents, because the immense risks, the dilution, the nine-figure losses, they're all already baked into the price.
So the whole story just hinges on management hitting that number.
100%. It all comes down to their ability to execute on the spectacular $200 million FY26 guidance. You're placing a high-risk bet on the successful, aggressive monetization of those 63 patents.
So if you're a swing trader, your horizon is immediate. You're looking at CES, you're looking at that January 7th record date.
Yes. But if you're a long-term investor, this demands a multi-year horizon, extreme patience, and real conviction that management can convert this proprietary tech into massive sustainable revenue.
It's not for the faint of heart.
Absolutely not.
The key takeaway for you, the listener, is whether the strategic protection offered by those 63 WISA patents and the new blockchain ventures is strong enough to bridge the chasm between negative $94 million in losses today and the promised $200 million in revenue tomorrow. That is the fundamental choice facing investors in Datavault AI, and it is a gamble worth understanding fully.
We'll be tracking those CES updates and the market reaction very closely. If you found this discussion valuable, make sure you hit that subscribe button to catch our next stock analysis.